Hello, welcome to my blog, AccountantCam. My name is Cameron Andriola, and today I'm going to give you 3 tips that will allow you, as a business owner, to impress your CPA during any audit, review, or even tax preparation. These tips are items that you can take care of before giving your information over to your CPA. Ideally, you'll have everything tied out with supporting documentation, and as a result, the process, whether it be a tax return or a review, will go much smoother for everyone. Retained earnings should always tie. This is the #1 tip I can give you when handing over your books to a CPA. If your beginning retained earnings does not match last year's ending balance, then we're already off to a rough start. Now, for those of you using QuickBooks, this will be an issue for you every year. The main reason is that distributions and contributions don't automatically close out to retained earnings like they do in our accounting software. Now, this is an easy audit adjustment to make. You simply reverse out your prior year distributions and/or contributions as of the first day of your new fiscal period and take the other side of that entry to retain earnings. When you run your trial balance report, you should be able to see that your retained earnings balance agrees to last year's ending balance. So in the picture I have on the slide, I gave you an example of what I mean by this. On the left-hand side of the screen, you can see a balance sheet where at the end of the year, retained earnings started at $605,000, and then it reflects the current year loss of $3,000, so ending year retained earnings for that period would be $602,000. And then if you look at the balance sheet, which would be the fiscal year after this, or the first period after that, you can see that beginning retained earnings reflects that same amount of $602,000. This is something that your CPA will always look for, and this is just a faster way to get the process going if you already have retained earnings tied out. Also, I would recommend looking at any other equity accounts such as common stock or additional paid-in capital to make sure those balances haven't changed. Unless you are liquidating or have sold stock, these balances should just be a carry forward from year to year. If after reviewing both of these items, your trial balance still doesn't match what your CPA gave you, you might want to check your journal entries that you posted. Make sure they match exactly what your CPA gave you and that you have hit the right accounts with the right amounts. The next tip I can give you is to always focus on the balance sheet. Oftentimes clients aren't sure how much support or what types of support they should give their CPA in addition to their books. Ultimately, it depends on what type of engagement it is. If we're talking about an audit, then you'll have to make everything accessible to the auditors and just wait on their sample list they give you. However, for a review or tax preparation, I would recommend starting with the balance sheet. Simply go down each account and one by one see if it makes sense and see if you have supporting documentation for that balance. So some examples would be for cash, can you provide a bank reconciliation and a bank statement that agrees to the GL? For inventory, can you provide an itemized list that shows that you did a physical count and that you don't have any outdated materials that need to be written off? For your note payables, can you provide the original loan agreement, which would indicate the amount of the loan, the interest rate, the maturity date, and how often the payments are? This will be the best guide you have for ensuring that you have provided all the necessary documents ahead of time before your CPA starts their work. It will also minimize the amount of follow-up calls and requests for emails or faxes or additional information that will be needed. My last tip I can give you is if you don't know, simply ask. Two of the most common balances I see clients have difficulties are booking the prepaid accounts or the accruals. So if you're not sure how to keep track of a prepaid expense or how to book your payroll liabilities or maybe your insurance liability, I would recommend just having a discussion with your CPA ahead of time, and perhaps it would be easiest for everyone if you just made this an annual audit adjustment, or in other words, something the CPA will take care of and you just leave it on your books for them to fix. So I hope this presentation will help. It should allow for you and your CPA to have a better workflow. If you have any thoughts or comments, feel free to share on my blog, and also follow me on Twitter. My handle is AccountantCam. Thanks for stopping by, and have a good day.